Well, the headline inflation rate of 3.2% for the year to September and a core inflation rate, the one the Reserve Bank watches, of 3% is bad enough. But the annual rate for the last 6 months was 4.2%, and it was generally seen as a very ugly report. Within a few minutes of those numbers hitting the traders' screens, the odds of a rate cut on Melbourne Cup Day next week went from 41% to 0. So that's now ruled out. The odds of a cut in December went from 67 to 26%, and for February from a certainty to 60%. So unless the data improve, that could be it for rate cuts. The Australian dollar popped up when the data came out, although it had already been increasing a fair bit after midnight because of a fall in the US dollar. And the All Ordinaries fell at the same time because companies tend to make more money when interest rates are cut, especially banks and property companies that borrow a lot. The Aussie dollar is now trading at a 3-week high of 66 US cents, and the All Ordinaries index is at a 2-week low, with most of the banks and property stocks down around 2 or 3% today, and CSL off another 3.9%. The American and Japanese markets went up, both to record highs as the leaders of the two countries met. Microsoft went up after it took a 27% stake in OpenAI, the company that owns ChatGPT. And Microsoft's market value is now above 6 trillion Australian dollars, which is about twice the value of all the assets owned by all Australian governments, federal and state. Finally, on commodity markets, the oil price fell 2% as the volume of oil in tankers on the ocean hit a new record high. And that's finance.